How do we want it to end at some point? Your first business you buy probably is not going to be the business you have forever. And I think that's okay, because then you can sell the asset. You can't sell a job, but you can sell an asset. And so that's what we focus on at the end of the book.
What can sellers be doing to better position their business to be bought? What's up, guys? Today's episode is going to teach you a hell of a lot about how you can make a lot of money. It is with Codie Sanchez. She's the founder of Contrarian Thinking and the author of a brand new book called Street Millionaires. In this conversation, Codie breaks down the process to find, buy, and scale small businesses. Why small businesses? These boring businesses end up creating an immense amount of wealth for people across the country. And she's here to share all the secrets as to how you can do it and why it's so important for you to own equity or some sort of upside in whatever it is you do. You guys are really going to learn a lot from this. Codie is in her top game, and I think that you guys will all find her book very valuable. So here's my latest conversation with Codie Sanchez. In America, there's really kind of two different classes of people. There are people who own equity, own upside, who own a share of profits. And that whole class is kind of like the ownership class. And then there is everybody else. And those people usually are working inside of a business or somehow operating in a way that doesn't allow them to have ownership of equity or profits. Your whole thing is get into the ownership class. Why is it so important to be in that part of the economy?
Well, if you care about making money and you want to be a millionaire, let's look at what the data says. The data says that one thing that's good news, 80% of millionaires in the US are actually self-made. Right? Despite what we hear on the news, most of them made it themselves. They didn't inherit it. The other thing that's interesting, though, is that if you want to be a millionaire, well, 60% of all millionaires have ownership in a business. So you either have a 60% higher likelihood of becoming a millionaire if you own something, or you can stay in the lower percentage. And the higher the net worth of an individual climbs, the more the likelihood is that they have ownership overall. Like an 88% likelihood that a person who has a $30 million net worth owns assets, predominantly business assets. The problem here, though, is that we've kind of become this nation that no longer owns anything. And you know how we really know that? The fucking Canadians are beating us. So Canada has an ownership class structure of 7.8% of Canadians own a small business. In America, 6.5%. So we, by and large, do not own small businesses. And then you might be able to say, well, what about the stock market? Do we own stocks? And you probably know this all too well. But the fascinating thing is stock ownership has gone up by and large. More Americans today own stocks than they did, say, during the Great Depression or before them, even at the height of the Great Depression. 62% of Americans own stocks. But small problem there. The 80% of all outstanding stock is owned by the top either 4 or 6%, depending on how you calculate it. So we all, maybe we own a little bit of stock, but not enough to be material. And if we don't own things, we have a much lower likelihood of actually becoming a millionaire, which is a dream, I think, that is very American. And so my push here is, all right, the data's not looking great. It's looking like we're increasing to have concentration of wealth in the hands of the few. And if we're students of history, we know that ain't good. It never turns out very well. And so my push is, how do we get more everyday people, not even necessarily having to own an entire business, but get a piece of it? Because it's the only thing that somebody can't fire you from or take away from you in this capitalist structure.
Now, when somebody says to themselves, hey, I work at a company, I don't own upside in the company, I don't own equity, I don't get a share of profits, any of that. But I want to get into that. Is the quickest, most easiest path to go from I own no stocks to, okay, I own some stocks. And that's kind of like the crack in the wall or the crack in the dam to kind of enter into this new world. And that's where they should start. And then they should go figure out how to buy their own business and kind of do that.
Well, I certainly think stocks are the easiest. The problem is over time, right? They beat inflation basically. And so you really want stocks because you want to make sure that your money doesn't erode, since that's what the government does to our money. Your people know this all too well. And so yes, I do think you have to have some mechanism, whether it's Bitcoin or stocks, in order to beat inflation. And so I think you could start there. But what I am presupposing, I guess, is that you should figure out a way to either become so valuable to the place that you work, where you understand how you make money in your company, you understand how the company makes money, and you can become a co-owner because of the value that you bring to a company. And I don't think we think about that anymore. If you think about it like historically, what's fascinating is if you go back to the way America was created, how did businesses used to get changed hands? Well, you used to have a small business, and maybe that's could be a stable, right? It could be a blacksmith. Well, that blacksmith didn't go out and sell the blacksmith company to a bigger blacksmith company or to a private equity firm. What did they do? They took on an apprentice. That apprentice learned the trade. And then eventually when the blacksmith wanted to retire, it exchanged hands. That's how we used to trade businesses. And somewhere in between that, we got corporations coming in the middle. And so what I'm saying is there's a generation basically of baby boomers, of our generation's blacksmiths, who have businesses that they need to exit. We're talking millions and millions of businesses, somewhere around 68 trillion in wealth to be exchanged between the baby boomer generation and let's call it millennials and Gen Z. And people think that means they have assets they're going to transfer us. They don't have assets they're going to transfer us. They by and large have businesses because this group of baby boomers, they own 50 to 60% of all small businesses in the US are owned by baby boomers. You know this all too well because you run businesses too. The average small business owner has 90% of their wealth tied up in their small business. So a big chunk of the asset exchange is actually held up in these businesses. And if we don't transition them over, then that wealth eviscerates. And so what I think is maybe you start with stocks and maybe you then get a little equity in your business. And maybe then on top of it, you learn how to transition and take over a business that you work in, a division of the business that you work in. And I wish somebody had taught us that sooner. And so that's the idea with the book.
If you're working inside of a company, before I want to go buy a business, maybe I like who I work with. I got a short commute. This has been a place where I've learned. Maybe I feel some degree of loyalty to them. What are some things that I could do to try to negotiate with my boss or the person who owns the business to say, hey, look, I want to stay here, but can I change the way that I get paid a little bit, right? Can I maybe get a share of profits, or could I get some equity in the organization? Like, what are some tips or tricks that you think could resonate there? Yeah,
well, I'd be curious your take too, because you've played this game also. But I sort of think there's three legs of the stool for getting ownership in a company. And the first and most obvious leg is, can you make the company more money? If you can make the company more money in a way they're currently not today, you can ask for a percentage of the upside. You don't ask for all of it, but you could ask for, like you said, hey, if I increase the revenue of the business, could I get a share of revenue? Maybe not 100% of it. Could I get like 10% of the $100,000 in additional revenue I bring in a year? And that would be cool if you could get that. And then if you were really sophisticated, you might say, could I get a percentage of that revenue in perpetuity? You could say, could I get a percentage of that revenue plus some equity in the business, pro rata? So the amount of revenue that I bring in, could I get that as a equal percentage of the business overall? If you can't negotiate that, because that would be like the best negotiation for you, you might say, could I get a profit share? Hey, I know I bring in this much revenue, but I only want to take a small percent of actually the money that you keep in your pocket. That might be even a more giving way for you to do it. Or if you really believe in the company, you might say, hey, I don't even want $1 for me bringing in additional revenue. I just want equity because I believe in what we're doing here if I drive additional revenue. Okay. So you can say, I'm bringing more money to the company. Can I get a percentage of the upside? The second way is, can you cut costs, right? So a lot of times this is how consulting firms or private equity companies make money. They come in and they go, okay, right now you've got a 20% margin. For every dollar that you make, you're only keeping 20 cents. If I can get that up to 30 or 40%, so 30 cents or 40 cents, could I keep a percentage of the cost savings that I make for you in the company overall? And then the third way would be decreased pain. So especially if you're, in a smaller business, it's like, wow, I can tell right now, boss, your job's tough. You're managing all these people. You've got this mess over here. What if I come in and I help operationalize this? I take a few of these direct reports off your plate. If I do well and build this segment of the business, but it's less stress for you, would I be able to earn into some portion of the business? But at this point, I think a lot of people kind of get overwhelmed. They're like, I don't fully understand all of that. That might seem like too much. And you either snap, get it, and you kind of start to see the matrix, or you're still a little confused because you haven't played in the finance world like you and I got lucky enough to. And so I think at that point, if you're feeling overwhelmed, the thing to do is you just obsess on the only thing that I really think makes wealth, which is understanding the language of money and deal making. It's not like stocks versus bonds versus crypto. It's like, do you understand what revenue share, profit share, distributing equity looks like? And then it's like, you can play with these levers that nobody else knows exist in the world. And most people just go, can I earn more, boss? Can I get a higher salary? Could I get 2 weeks off? Could I have a different title? And you'll never care about those things again once you know how to actually negotiate.
What is the best way to go get that knowledge, right? So it's kind of like learn the language of business, learn the language of finance. Do I read a book? Do I go on YouTube? Do I have to find somebody who knows this stuff and buy them coffee so they teach me? What is the best way to do it?
Yeah. Well, I mean, I wrote a book called Street Millionaire. And so in the book, there's an entire section on what I call structuring and negotiation. And those things are what you need to know in order to do this. I think the best way to learn is typically through a case study. It's how you and I learned when we were doing deals, right? And in a fund group, how does a fund group decide whether to invest in one thing or another, or to take risk? Well, we get together in what's called an investment committee, right? We sit down and we go, all right, I got this idea. I think we should invest in this. And somebody goes, hate that idea. Here's 10 reasons why. And you go, no, I think this is a good idea. And you beat up these ideas live. And so in the book, we have these case studies where you can see by seeing a bunch of examples continuously, and you're going to start to see yourself in those examples. And so I think that is the best way. If you just go read the terms, you won't institutionalize it. You won't internalize it. And so I like them to see a bunch of examples. You learn the terms and then you see the terms in action, and that's how you figure out how to play the game. And then, we have a community where we teach people how to do this. And in the community, we started doing an investment committee once a week on Monday nights. And I wasn't sure if it would translate from finance to, people who hadn't done this before, but it's fascinating to watch live because, most investment firms are closed doors for a myriad of reasons: risk, liability, etc. So if you're a normal person, you're never going to get a chance to watch people who are really smart and have skin in the game and are going to lay down a lot of cash, determine how they handle cash. So the best you could get is you could go read one of the greats. You could read Ray Dalio's book. You could read, Howard Marks' book, but you can't actually see what it looks like when Howard beats up a deal. And so when we started doing that, I realized, this is actually how you have to learn deal making. You got to get in a room with a bunch of other people and you've got to watch people fight over whether you should allocate to something. And that is, I think, how you learn how to get equity, how you learn how to do deal making, and how you learn to structure.
Now, as somebody starts to learn from somebody else, when do they know that it is time for them to go try it themselves, right? There's kind of in college, maybe, whatever topic you're there to study, you kind of get kicked out after 4 years, right? And they're like, okay, go out into the world, now it's time. So it's very obvious when it's time to start becoming a practitioner. When you're doing more self-study, it's not as clear. And, one of the things people is they can get paralyzed by just constantly studying. You're like, have you done a deal yet? Have you talked to somebody who's selling their business? And so what is your advice for people to kind of figure out when to actually, start putting some of this into practice?
Yeah. Well, say you're going to do it by yourself. So say you pick up something like the book or you watch a YouTube video and you decide, okay, I want to buy a business. I want to figure out how to get ownership myself. We sort of have a process where we funnel you down from at the very top, high level origination. So looking at a ton of deals to smaller level due diligence. You take very few deals and you do sort of a base level due diligence. Do I like the profits? Do I think I like this industry? Then you go pretty deep into a few deals. So typically I've found for the people that buy small businesses, you want to do somewhere between 50 and 60 high level due diligence deals. You're probably going to go pretty deep into 4 to 10 of them. And then by the end of 4 to 10 of them, you're going to kind of be able to tell, this one looks really interesting. And so that's what I've seen the numbers be. Could be a lot less, could be a lot more. For instance, let's say you're an accountant right now. And you already understand finance a little bit. You understand how to look at a P&L statement. You're ahead of the game. Anybody who's already in finance, corporate backgrounds, you're going to know how to do this a lot quicker when you see it. And if you go to analyze another accounting firm, you also have a leg up, right? Because you're like, I know how we make money here. We got this recurring revenue. I know these businesses typically end up making about 30 cents on the dollar. So here's a business that makes 30 cents on the dollar that's doing this kind of revenue that's located in this city. It's in accounting. I already do that. I might be able to move pretty quick on that deal. And so we teach something called the perfect fit business, which is basically in investing, we all have a thesis, right? Like I invest in American companies that are in the SMB space that need tech infrastructure. But if you're a newbie buying a business, you don't have a thesis. You don't have all of this built out. So we have something that looks like a deal box where you have a bunch of parameters, kind of like when you're going to buy a house. You're like 2 bedrooms, 2 baths, $500K or less, located not in New York because it's too expensive here, somewhere not New York. And you're not going to really go outside of that box too much. And because you limit your scope, you actually have a higher success record. And I think usually what happens in doing deals, it's not so much how many deals can I do? It's I don't know what I'm looking for. And so we spend a lot of time on deal clarity. What is a good deal for you? Because then when you find it, you just fucking know. You just go, if somebody came to you right now and they were like, hey, I got this like company. It's in the financial media space. We have, hundreds of thousands of subscribers. We've got all these eyeballs. It's the same target market as yours. We don't really make any money. Could I sell you part of this business for like a percentage of upside? Maybe you would probably be like, oh, I could very easily tell if that's a fit or not. And that's where I want to get more people because I think we all have some sort of Venn diagram. It's just nobody's shown it to us before.
Let's use like an example from one of the deals that you guys have done in terms of walk us through like, okay, here's how we developed what the deal box was. Here's why maybe we were interested in this space. How did you go find the deal? And then what did you ultimately like negotiate there? And I think using that example will really help people understand like how this deal box actually makes everything more efficient. And it's kind of like by saying no, you get to say yes quicker.
Yeah, 1,000%. I mean, I think about it a little bit like that song too, the 6'5", blue eyes, trust fund, right? It's like, okay, I don't agree with that woman that those should be any of the things you should actually care about in a marriage, but say that is what you actually care about. Once you see it, you move a lot faster. And so for instance,
you just walk around New York City looking for 6'5".
Yeah, exactly. There are probably more here. But you might not wish you married one. So one of my first deals, before I was pretty sophisticated at this at all, I was working in finance. So I had a really big job. I was working long hours nonstop. And I needed a deal that wouldn't take up much of my time, that could have an operator that ran it with me, that wasn't that much money because I was scared about failing, even though I had been in finance before. I wanted it based in an area that, that person was located on the ground because I wasn't. I was running around all over the country and world at the time. So anyway, when I started looking around, the first thing that I looked for was an operator. I was like, who's somebody who I just know is going to get shit done, who has already had experience in the area that I would look to buy a business. We call that proven talent. And can I find that? So I started looking around for people in small business, and I ended up finding a guy in the laundromat space, and he had done real estate. We were going to do some real estate deals together. And he's like, I also have this like laundromat thing that I did over here. I'm like, talk to me more about that. And he's like, well, here's how it works. It actually works really well for real estate. It's the same play. You're looking for demographics in a region. You want location. There's a lot of similarities. I was like, could you run another one? And he was like, yes. I'm like, so if I find one, you could run it. I'll finance it for you. I want to see how this works. And if it works well, could we scale it to a few? And he was like, yeah, we could do that. That's really easy. And so, anyway, so if you came to me and were like, Codie, do you know how to operate a laundromat? I'd be like, the thing is, no. What do I know how to do? Find deals and I can get money. So my first deal was tiny, 6-figure deal, 5 figures in profit. And we bought this laundromat because I was like, I think we can cash flow off of this. And then if this model works, can't we buy like 5 or 6 in the area and you could service all of them, or we could have a GM that could service all of them? And I bet we could make like a couple $1 million a year on this. Like nothing crazy. To me at the time, I mean, a couple million is a lot, but that's top line. That's not bottom line. So let's say at the end of the day, we can make 300 or 500K between the two of us on a bunch of these laundromats. That would have been material to me. And so anyway, so that's the first deal that I did that worked. I did some little deals before that were startups, and I was always terrible at that. So I like buying instead.
And when you go in and you find one of these laundromats, how do you figure out, which one is the right one to buy first? And then also like how to structure the deal, and maybe actually what the seller is willing to structure may have an impact as to whether it's a good deal or not for you to do.
1,000%. Well, I want to say a couple things first, which is
today's episode is brought to you by Zappo. Picture this. Every time you trade Bitcoin, the spread determines how much value stays with you. That's why securing top-tier Bitcoin trading fees is key to growing your Bitcoin wealth. But what if I told you that there's a platform that lets you save up to 90% on your Bitcoin trading fees? Now, here's the kicker. Not only do they save that money, they also are dubbed the Fort Knox of Bitcoin. Zappo Bank. They're the world's first fully licensed and regulated Bitcoin and banking group, and they have been delivering a unique blend of physical and digital security for over a decade. From military-grade Swiss bunkers to cutting-edge digital protocols, they've got you covered. And now they're bringing you the kind of competitive Bitcoin trading fees typically reserved for institutional giants, right in the palm of your hand. With Zappo Bank's ultra-competitive spreads, more of your Bitcoin stays where it belongs, in your pocket. Whether you're trading big or small, every move you make is designed to boost your gains and fuel your financial future. Head to zappobank.com/pomp to join. That's XAPOBANK.com/pomp.
Please don't buy a laundromat. Like I talk about on the internet, so then people go, Codie thinks you should buy laundromats. And I use laundromat as an example because they're just simple. They're simple businesses. I call it the gateway drug business. It's easy for you to understand. But I really also do not like starting laundromats. So I was just meeting last week with somebody who started it. You know when you meet an entrepreneur and you can just tell by the look on their face they've fucking been through it lately? Like I walked in and I was like, how you doing? She was like, it's good. You know, we got it under control. But she had started a laundromat. And it cost her $2.1 million and was 9 months delayed. And laundromats just don't make a ton of money. Like a couple $100,000 per laundromat, top line revenue is like normal. And so to make back 2.1 million, that's going to take a minute. And so I was kind of watching this and that's why I like starting some of these old businesses because, or buying them, starting a car wash, starting a laundromat, real expensive, actually, a lot of equipment. So I just want to say that first. Now, how do I structure a deal? The good thing about deals these days is this was an off-market business. So, the person didn't know that they wanted to sell. And this is the case with most small business owners. So if you go and talk to a small business owner, 6 out of 10 of them have no transition plan and have no desire to sell their business. They think that they can run it forever, even if they're 60. And so in this instance, a lot of times what you're doing is you're kind of educating the seller a little bit. Like you might walk in and go, hey, and this is what I now do. I mean, the team sees it. Like pretty much everywhere I walk in and go like, oh, this is incredible. Like this coffee shop. Is this your coffee shop? It is. I would say about not in New York again, but in smaller towns, probably about 30 to 40% of the time, the person you're talking to at the front owns the business. So you're like, hey man, like, do you own this coffee shop? That's awesome. Okay, cool. How long have you owned it? Wow, 20 years. That's incredible. That's so great. You have a family. You're located in the community. Cool. Do you want to run this thing forever? You're going to want to have those kids take over it. Oh, your kids moved to New York. They're accountants. They don't want anything to do with it. Interesting. It's kind of funny. Like I look to buy businesses in this area, actually. I have no idea if you'd ever be interested in selling a business, obviously at like the right terms and price and all that jazz. But if you did, I could talk to you a little bit about what a business might be valued at. And what business owner is not going to, they're like, yeah, what would this thing be valued at? Like often they're going to be open to the conversation. And so that's typically how I start. And in laundromat space, I had a little bit of an unfair advantage because I speak Spanish and a lot of them are owned by Spanish speakers. And they extra do not know how to sell. And they don't have bank loans. They have like all their money in cash in the business. So if I buy a business for a couple $100K from them, that is material because it's not like they're sitting with debt on the business. That's like 200, 300K in their pocket, right? And so that's how I would start. And then the only other thing that people typically say here is they're like, well, must be nice. I'm not sitting on 300K, Codie. Like, I don't have any cash. How could I buy a business without cash? And I'm not saying that you can go out and pay $0 in 30 days to buy a business. Like, I don't think that's reasonable. But 60% of all businesses sold on the lower middle market below private equity level are sold with some percentage of seller financing. Mm-hmm. And so that means that the seller will use future profits in order for you to buy part of their business. And so it's very normalized in small business. And for whatever reason, I don't think people talk about that.
Now, as somebody's going through this process, what are the red flags that pop up where, there's some things where I think if you want to be the operator, if you want to go and fix it, sometimes you see issues and you're like, oh, that's the opportunity. Like I can jump in and fix it. But there's got to be things where you're like, if I see X, I smash the, break glass emergency button, I'm out. I just eject from the situation and I don't want to go in. What are those red flags?
Never buy a business if it is not profitable and it's your first deal. We don't buy other people's problems. We buy profits. Second red flag is If the owner of the small business says, hey, I don't work on this business ever. It's an absentee business entirely. Unless you're in there in the business watching them never work on it, a little bit of a red flag. I typically don't believe that in businesses. Third would be you want to make sure that the business and the real estate is not tied, or you due diligence them separately. So a lot of times people will get into real situations where they get over their head by buying a small business that they're like, the business is profitable. The business makes $100K a year, but they just bought a $2.5 million commercial property to go with it. And that sinks them. Like those are two very separate things. And then the fourth, I would say, is like the perfect four storm. So if you want to buy a business and have it go under, here's a great way to do it. 1, buy a business that is not profitable. 2, that is not located near you if it's a brick and mortar business, so you can't go to fix it. 3, with a partner that gets equity in a business without cash alongside you. 4, that is in restaurants, real estate, or I don't like consulting businesses, ones where like it's a human, you have human risk. It's basically a job. And I've seen that happen quite a few times. And so if you can stay away from the perfect 4, and if you can stay away from some of those big red flags, you decrease your risk quite a bit. But the number one risk is always, is there enough cash in the business for it to be profitable and to continue to be profitable?
And how do you evaluate that?
Yeah, 2 things. 1, you want to look at the financials of the business, the P&L of the business. And then you want to confirm that against the tax returns. Where we get in trouble is small business owners don't love to pay the IRS every single cent from their small business. And so because of that, there's usually a big difference between the P&L and the tax return. And then they'll do this thing called add backs, which is like, let me add back in the truck that I bought that was $60,000. That didn't really need to have it. So the profit of the business is higher than you think it is. Let me add back in a bunch of these expenses. This was really me and my family in Mexico, not like a real trip that I had to take for the business. And so all of a sudden you're sitting on this profit and loss statement that looks juicy, and you compare it to the tax returns and you're like, wait, you lost 20K last year? And so we've really got to make sure that we understand what is real in the business and what is not versus the 2 statements. Now, if they're a pro and they're looking to sell, they've either got audited financials, really rare in small businesses, or they have really clean financials with a lot of explanations that you can dig into. I would expect if you're going to buy a small business, you're not going to have that. And so what you really want to do is realize one thing. Every time you buy a small business, you're at an information disadvantage, right? The guy who's been running the thing knows more than you. And so your real job is to get that person to understand, hey, if what you're telling me is true, not only will I pay you what you want for the business, I'll pay you more. I will give you a premium for the business on the upside, but I can't be sure of everything you know. That would be unreasonable for me to think everything that you know, I know, right? So I'm concerned about your legacy and your small business continuing and me going bankrupt and your employees not continuing, which means we have to de-risk this deal a little bit. And so could I buy the business instead for a 30% lower price unless we hit these milestones? And that means if we hit those milestones, I'll actually pay you 40%. But if we don't hit those milestones, then at least I've protected the business and I've protected your employees. And that's hard to argue with.
What you're describing is a lot of detail oriented work. Almost like a checklist, really making sure that you're hitting certain metrics and avoiding the red flags, etc. There's a lot of dreamers that are out there. Can they be successful buying businesses if they're not detail oriented?
That's a great question. Well, I think tools limit mistakes. So one of the things we do in finance, I'm not the most detail oriented person, but I am very risk concerned. And so every investor has what's called a due diligence checklist, right? So like a list of all the things that we got to check off before we fly the plane, just like a pilot. And so we have a it's in the book, in the digital download, but we have a series of checklists that you can use. I think that limits mistakes. And then the other thing is every good business owner or buyer or really leader knows that they can't do it all alone. And so I think if you're like, man, you know what I'm good at doing? Selling shit. I'm good at branding. I'm good at marketing, but I'm not so good at finance. I'm not so good at details. What would you want to do? Well, do you want to just say, okay, I'll never be successful. I'm going to decrease my likelihood of being a millionaire by 60%. I'll never understand the language of money. It's too hard. It's too tough. Let me just be poor. Fine. Option 1. Or option 2, find yourself the opposite of you. Get yourself a little yin to your yang. And in business, typically the vernacular is like EOS's visionary versus implementer. And that's really the idea of like, can you have somebody who has big ideas? And then can you have somebody that goes, whoa, wait a second. How are we going to actually execute on that? And so find that, but still get ownership. And I think otherwise that's just an excuse for you to live a small life.
I'm going to read out a couple of things that you've said over the years that I'd love for you to elaborate on. It sucks being broke. It sucks working hard. So choose your hard.
The truth of the matter is simply this. I think today we have a society that tells us, hey, it's just too hard to be fit. Well, have you tried being fat lately? Being fat sucks too. And so I think at the end of the day, you can either do what Naval talks about, which is you can upfront pain or you can have long-term pain. And if more people today can think about the Mark Twainism of if you're going to eat a frog, eat it first thing in the morning. And if you're going to eat 2, eat the big one first. Your life just gets easier. And so, I mean, you know this more than anything being in the military. I'm married to a dude that was in the military. And the most fascinating thing about him, and I think he'd agree with this, he just does the hard thing when he says he's going to do the hard thing always. He literally doesn't ever not do it. When he says he's going to go to the gym, he goes to the gym every day. When he says he's going to work really hard at going to the gym, he works really hard. Does he have to be smarter, richer, better than anybody else? No, he just does what 90% of people don't do, which is the thing you say you're going to do. And so I think it's freeing, you know? I think a lot of people think that that is rude or demeaning. And to me, I'm like, whoa, if the difference between me and the really, really rich people is just that they do hard things more frequently, even when they don't want to, that's fucking cool because that means I could do that too.
Another one is a rule when hiring, hire people so hungry they may bite you.
First of all, you can't teach desire. My dad has the best line ever about this, which is you can lead a horse to water, but you can't make it drink. And I think that is the true thing in business too. If you get to optimize for one thing and people you bring along with you in life, make sure it is that they want a bigger life for themselves. This is the Carol Dweck growth versus fixed mindset. If I could choose one thing in any member of my team, it's not IQ, it's not history, it's not where you went to school, it's how bad do they want it? Because if you want something bad enough, you become obsessed, and obsessed people are really hard to beat. And so I like my team having little ankle biters on it.
When talking about digital businesses, you said build once, sell forever.
The nice part about a business that doesn't have operating cost, like fixed operating costs, like a hard asset business, is that you can have a product that you don't have to keep creating. It just sits there and more people can utilize it. So, you know, right now, for instance, I think there's a real opportunity for people to buy internet businesses just like they buy Main Street businesses. And for instance, we had a newsletter that we built just for one singular purpose. I wanted to see if we grew just a newsletter business. The newsletter business didn't make any money. It had like 3,000 subscribers, I think, by the end of it. This was years ago. I was like, can I sell this list to somebody else? And so I built it up. I turned it into a business. It had an LLC. It had intellectual property associated with it and it had subscribers. And I went on a website called Deuce and I sold the newsletter for $8,000. I think when people think, I want to buy a business, they think millions. For a lot of people, I'm like, start with $5,000, start with $10,000, because then what are you going to learn? Intellectual property. You're going to learn deal docs. You're going to learn negotiating. You're going to learn how to buy and own something and eventually how to sell it. And I think once that happens, now we don't think that much about buying and selling houses. We're like, yeah. People do that. I'm not that concerned about it. And I think we should get that same way with business. And so if you can do that with a digital property, then you have much higher ability to make money long-term because you only have to build something once.
What are other examples of digital businesses where you see people doing this?
God, I mean, across the board. Think about, I like to use Turner News Network. I don't know if people know who that is anymore, but Ted Turner was a total stud and basically built, CNN. He built Turner Cable News. He built this media, huge conglomerate. And the way that he built it is really interesting. He didn't build it. He bought it. So his dad had one of the first cable news networks, but his dad got sick, sold it to somebody else. Ted found a way to buy it back. And then he went across the country and he bought up media assets across the company to create an empire. And I think that we have this delusion today that businesses are built in our garages with our sweat and tears, backed by venture capitalists. And listen, I invest in those companies too. I'm glad people are willing to do it. But if what you really want is profits, if you want to make money on something, then I think you have a higher likelihood of making money if the thing is already making money, since 90% of startups fail anyway. So like, let's start it, I don't know, second base instead of in the dugout. And then let's build on top of it. Then the other cool thing is if you buy a business today, so let's say you buy a newsletter, let's say you buy a YouTube channel, let's say you buy an education business online. Let's say you go to Kajabi or you go to one of these sites where they have Coursera and you buy an education business that's cash flowing a few $1,000s a month. Well, then you use the cash flow of that business to do your next acquisition. And the other cool part is that I wish more people told me that you can get loans on your business then. And so you can't get loans to start a business. That's really, really hard. But you can, if you have something that cash flows already consistently and a history, you can go to the bank and you can say, hey, this thing's made $100,000 for 3 years. Can I get a line of credit? And it's not going to be a huge amount, but you can't do that up in startup land. And so if we want to compete with the really rich, we got to play their game.
There's a acronym that you have, RICH, Rich, Research, Invest, Command, Harness. Explain. Today's episode is brought to you by Polkadot. Polkadot offers secure, scalable, and decentralized blockchain technology that perfectly aligns with the needs of innovative projects. It was developed by Gavin Wood, one of the co-founders of Ethereum and the creator of Solidity. Polkadot aims to build an internet where users have full control over their data and their applications. Polkadot offers tons of unique features, a shared security model, along with the new auction model and significant implementations like ASIC banking. Given these characteristics, it's easy to understand why Polkadot is gaining more and more traction in the cryptocurrency world. Some people even are talking about it as the AWS of Web3. Now, companies such as Mythical Games, Astor Network, and over 50 other independent blockchains with hundreds of applications already leverage Polkadot's technology to power their platforms. If you're looking for a reliable, scalable, and cutting-edge solution, Polkadot seems to be the top choice for industry players. Go check them out today at polkadot.com.
So in the beginning, I want you to learn as much as possible. You never lose money learning, right? You don't lose money in the education, you lose money in the implementation. So what I want people to obsess on is becoming as smart as you can in your first deal, because if you do that, you'll do more deals. If you do a deal willy-nilly without learning much, you might fail, and then you'll never do a deal again. And I think that's a shame. So I like to start with this idea of research and learn. Then once you've sort of learned, it's okay. Now to your point, how do we actually get you in the game? Let's have you take a little risk. And when I talk risk, it's not that I want you to mortgage your house. I don't. Please do not do that. I want you to do the thing that I know to be true, which is, have you ever made money with zero risk? Like, it just doesn't exist. In finance, we talk about like risk on and risk off trades. We actually have risk allocations. And we know that in order to make money, we've got to use this 4-letter word, which is put some money on the table, some time on the table, some reputation on the table. And so I think we haven't normalized that for most citizens. We're like, that's risky. You're like, that's where the money is. And so that second part is implementing. The third is, okay, now that you've done this, maybe a small deal or two to start, how can you become in command of your deals? How do you make the business profitable? How do you layer them on consistently? If you want to be, if you want to be very, very rich, how do you continue to buy more, or how do you create a portfolio? And then finally, how do you start thinking about the next steps? Like, what if you want to sell the business that you bought? And I think we should think about buying businesses the same way that we think about going into a relationship, which is, let's start with the end in mind. How do we want it to end at some point? Your first business you buy probably is not going to be the business you have forever. And I think that's okay, because then you can sell the asset. You can't sell a job, but you can sell an asset. And so that's what we focus on at the end of the book.
What can sellers be doing to better position their business to be bought? Yeah,
we have this whole process. I call it the cash out cake, because I think about it sort of like a tiered cake. It has levels to the game. And the bottom level is really simple. It's up your profitability as much as humanly possible and up your revenue. If you make more money, you can typically sell for more money. And then on top of that, we've got systems and processes. So if your business doesn't have any systems and processes, you got a job. You don't have a business. Next up from that, we want to think about who are the people in your business. Or is it a single man, key man risk? Like, you're in charge. If you leave, business is gone. Or do we actually have a managerial layer in there? Then on top of that, what I'm really thinking about is, in a business transaction, what you're doing is you're trying to decrease the risk for the seller so that they will, or for the buyer, so that they will increase your purchase price. And so that segment is like, can we have more diversified clients? Can we show historicals? And then the final segment is, have you explained this business and done some projections on what it might look like in the future to show that, yeah, the past was great, but the future might be even more bright. And so those levels can get you to a higher multiple.
Does it make sense for somebody who wants to learn how to do this to go work with someone who's buying businesses and kind of like almost as an apprentice and then go do it themselves? Or do you think that that's a high likelihood of picking up kind of bad habits? And so maybe you're better off starting by yourself?
That's a good question. I suppose it's like everything in life. The who matters hugely. But I do think that this is still rare enough in our society that getting around other people that are buying businesses is probably smart. And so even if the good thing about finance and buying businesses is it's black and white. Did that deal work? Did you make more money? Did that deal not work? Did you lose money? And so you can tell if somebody is good or not based on track record. And unlike often the stock market, there's slightly less luck and variability because you don't have the same market exposure. It's a little bit depressed because these are private companies, not public companies. So I think getting around other people who are doing deals is really, really important. Whether you go work for somebody, whether you get a group of people together who are all doing deals, whether you join a community like ours, when you get in the room with other people who like their Tuesday is your dream day, I think you make more money. And when you get in the room with other people that already have the life that you want and are already playing the game that you want to play, it's more likely you're going to play. If you hang out forever with people who aren't actually making moves, it'll become really hard to.
You're talking about people and the quality of the people. There's not really problems. There's just people problems in most of these companies. And so how do you deal with managing people, hiring, firing, and kind of all the people relationships or employee management?
Yeah. Well, we have a couple processes there. I think the most important thing that you can do is try to hire well. It's always easier to bring in the right people than it is to change people. And so how do you hire well? Well, you start with doing a deal with a company that you already like the culture. And there's lots of like red flags or green flags to look for in a culture. For instance, like, if you're going to go buy a business and their average tenure is 6 months of their employees, red flag. If you're going to go buy a small business and the average tenure is 10 years and the business is doing well, that might be a green flag. And so best predictor of future behavior is past behavior, right? So I'd probably look for that. And then we have some systems in there, like we call it the cheetahs. We call it the stripes versus the spots. So, I think about this idea, like if you want to find a top player, cheetah and a house cat, both a cat. Right? Two very different types of cats, though. And so we have a profile for what a cheetah looks like at our company. What does somebody look like who's going to run fast? And then we have a profile of what a house cat looks like. Doesn't mean a house cat's bad, but you better know what you're getting. So it might be okay to have a house cat type personality for somebody in your business who is, for instance, working in the warehouse. Is, for instance, driving a truck. They're steady state. They're kind of going continuously, but you're not going to get a fast uptick from them. And so I would recommend, if you're looking at hiring, you use and steal other people's processes. The beautiful part about business is that we're not doing rocket science here. Like everything that we do has been done before continuously, and we can steal other people's homework. And so we have something called the 9 Ps, which is where we take up a business from, let's call it, its first couple $100K to 9 figures. Now, not everybody's going to get to 9 figures. That's when you get to this all too well, protection. That's when you start getting to perseverance, which is like how to create a company that lasts forever. But the first 6 Ps are really important, which is like, your people, your process, your productivity, your performance. And if you have systems to measure all this stuff, it gets easier. And the last thing I'll say there, like, you become an entrepreneur because you're kind of unemployable, typically, right? And because you're tired of people telling you what to do, because you want to be the architect of your own life. And sometimes I think the negative side of that is you think that you need to do everything yourself. And what you should do instead is steal as much as possible to create little bumper lanes alongside you so you can be your wild self inside of the lanes that won't murder you. And that's what we try to do.
When you buy a deal and all of a sudden you realize you may have made a mistake or it's not going well, what do you do?
Oh, that's a great question. Well, first, your bank account size is a reflection of your speed. So don't dick around. Move quick. I think one of the biggest issues why businesses don't succeed long term is you need to do a thing and you're not doing it. You know there is a manager in that business that's not doing well. Put them on a performance plan. Have that performance plan be 30, 60, 90 days. And when they're not hitting that, you lovingly tell them it's not the right fit for you or for us. Move them quickly. Second is you always want to protect the house, which means cash. So one of the first things we do when we buy a business, for instance, is it's called decreasing the time between getting paid and providing a service. We want to increase the velocity of our cash. And so in most small businesses, if you have a cash suck business, that means I go and clean a house. I schedule somebody to come to the house. I clean the house. I do advertising to clean the house. And then I don't get paid until after the job is done. What would be better than that? Well, let's just flip it. Let's just say when we book the appointment to clean the house, we take payment upon booking. Right? And so we're changing the cash conversion cycle to be upfront. We're increasing the velocity of cash coming back to us. And so I think a lot of times when businesses get in trouble, it's always money. Like money solves all problems in business. If you have money, you can pretty much control almost anything except like legal fraud, I guess. And so because of that, I obsess first on just let's get cash stable. We also use something, this is slightly technical, but it's called a 13-week cash flow. And private equity typically manages their turnarounds off of a 13-week cash flow. I think money is a cruel mistress. You need to pay attention to her. She's going to leave you. And so every single week, every Friday, I sit down and now some days on Tuesdays, because some businesses aren't ready by Friday, but Tuesdays and Fridays, I'm looking at how much money we have in the bank account. I'm not looking at like what the accountants say the money's going to be on XYZ. I'm like, how much money do we have in the bank account? And what if things go sideways? Do I understand? And that has saved me so much headache.
What's the best part of your day?
Ooh, I mean, candidly, best deal I've ever done, husband. It's kind of funny. We do a ridiculous thing in the morning. We don't have kids yet. I'd like to one day, but it's a little snugs. And then we have this ridiculous little 20-pound, super non-manly cockapoo dog. And when you yell attack to him in the morning, like from the other room, he sprints in and does this jump onto the bed on top of you. It's the opposite of an attack. He's incapable of attacking anything, but it's the small things. It's husband and a dog and a snuggly bed.
What's the worst part of your day?
That's a good question. The worst part of my day is when I feel like I can't figure out what is wrong in one of our businesses. It's always the uncertainty. I don't think it's that hard to run a business, and I can kind of know what we need to do next, and I can work through a lot of pain that way. But I think one of the scary parts about entrepreneurship is when you're like, I don't know. I don't know what's wrong, and it's not working. And there are days when that happens. And that I've had to just come to terms with is part of the game of entrepreneurship. It's not actually that it's super hard all the time. It's that sometimes you just don't know what to do next.
Mm-hmm. What is the biggest win that you've had in your career?
Figuring out my perfect fit business. There was a long, long time. I spent 12 plus years working for other people in big financial firms, making them a lot of money, and feeling like maybe if I find the next business or the next team, it'll be right. And it took me a long time to realize, oh no, you need to do this by yourself. Mm-hmm. And not only do you need to do it by yourself, but you got to do it in a way where it pairs together the things that you're actually good at, but that also make money. And so at some point I was like, I really actually love teaching people. And I love talking about what we do for a living. And I don't just want to own all the companies. I want other people to own with me. It makes me feel good. Like it's a total ego play. And so when I figured out, wait a second, could I buy these businesses? And could I also teach other people how to buy businesses? And could we do it all together? That makes me feel like it's worth it. Because at the end of the day, we can't take all the cash with us, right? So don't get me wrong. I want to be wildly rich. I like money. I think it's protection in a lot of ways and it's freedom, but I want to do it with other people. Otherwise it feels sort of meaningless.
Biggest loss in your career?
Doing a deal with a friend that I thought was truly a friend that ended up stealing money. I really do love humans and I like doing business with people I like. It's one of my great joys is like having a group. I mean, we're in some deals together and you're like, isn't that cool? Like, look at what that entrepreneur did and they won and you won and I'm winning. And that feels like good to me. Plus I like talking about it. But one time I did a deal with a guy that I thought was really buddies with me. And it turned out he just really wanted to steal from us and use us. And that felt like a violation, the likes of which I had never imagined. And so now to this day, I have a little rule where I don't do business with people, partnership business with people, until we've known each other for at least a year. And after I think it's hard to hide who you are for a year. And after that, you start to, things start to show one way or the other. And so my dad had a line too that was, you're never going to regret the hows, you're going to regret a few who's. And I think that's true.
That's a great line. The book is coming out now. And I think that you spent a lot of time. I don't think people probably realize how much time, energy, and effort went into not only coming up with these ideas, but also presenting them in a very concise way that is understandable and digestible for people who are just starting out, but also maybe people who have bought one business and they're trying to figure out how to do it more often or scale. What is kind of like the 1 minute on, if I read this book, what am I going to get out of it?
Yeah. Well, I think I'd maybe tell the story of Wayne Huizenga. I'd say if you read the book, you could understand and create for yourself the same situation that led a man who had no prospects, drove a garbage truck to create a multi-billion-dollar empire in this country using boring businesses. And he's a guy that maybe we know his name today because he owned Blockbuster and he owned Waste Management, which was one of the largest waste companies in the country. But, there's a line in the book about Wayne, and he went to a pretty good school. And he was just a fuck up. He just couldn't do anything right. He was kind of unemployable. And somebody recalls seeing him drive around after college in a garbage truck, and being like, man, I better start working harder because Wayne over here is having to drive a garbage truck now. And that same guy went to go work for a couple garbage companies, watch what the owners of garbage companies did to buy some of his own to scale this monstrosity using creative financing and seller financing, and then create a pretty insane life where he owned a bunch of sports teams and made a giant impact on the country. And so, when I think about the book, it's got all the tactics and the tools and the metrics that you can use to have this be done. But I think the most inspirational thing is seeing humans who are totally normal and we're able to do it. And I think that means we can too.
Where can we send people to find you on the internet? And you guys produce a lot of content. So you have to say more than one place so that people can go and get all this.
Yeah. Well, if you want to buy the book, it's at msmbook.com. If you're doing it now at the time of this recording, there'll be a bunch of freebies that come out with it that'll stop in the next few weeks. And so you should go check that out, msmbook.com, because it's called Street Millionaire, and that's too fucking wordy. And then probably Codie Sanchez on Instagram, YouTube, Twitter, and then contrarianthinking.co is where our free newsletters are. So anywhere you pay attention on social media, we're there.
You're doing a fantastic job. You're helping a lot of people. I appreciate you doing it, and we'll definitely do this again in the future.
Sounds like a plan.
What's up, guys? I hope you're enjoying this episode, but I got a quick message for you. I just released my very first book. It's called How to Live an Extraordinary Life. In this book, there are 65 life lessons that I've picked up over the years. These lessons will teach you about money, investing, relationships, work, health, happiness, and much more. In this book, I wrote letters to each one of my children, and I tried to share those life lessons with them. If you pick up this book, there's 3 things that I can promise you. The first is that it is very concise. The audiobook is only 3 hours. You can listen to it on a long drive or on a rainy afternoon. The second thing is that you're going to learn something. It's worth the price of admission just for the lessons themselves. And then the third thing is it will make you think more deeply about your life and how you try to live it. So go pick up How to Live an Extraordinary Life today. It's a quick read. It's very impactful. It's very concise, and it would mean the world to me for the support. Go check it out today on Amazon, Barnes & Noble, or wherever you buy your books. Hardcover, audiobook, it all works. Thank you so much for the support, and I'd love to hear what you think about the new book.